Okay, welcome back everyone. Let's do a quick sound check and then we can get started. Hope you guys are well, had a fantastic weekend. Welcome back to another trading week. Alright, this seems to be good on my side. Let me know if there's any issues. We're going to get started with news trading session number 2. This is going to be your theory and practice. I think probably the one that a lot of people actually skip. But anyway, let's just get started. My name is Joro. With a quick disclaimer, any opinion discussed in this webinar or link to this presentation is provided as a general market commentary and does not constitute investment advice. News trading involves risks due to high volatility. Market reaction to news can be swift and unpredictable, right? Which leads to high trading risks and delays in order execution. So be attentive when determining the volume of your transactions and consider all possible risk factors, which a lot of traders actually forgot to do when news trading. All right, as per usual, with the series, we are going to show you the promo code to double your deposit bonus. And you should be getting access to the private Telegram channel as well. If you are new and you registered through the website for the webinar, if you register your email, you should be getting that link through your email. All right, so a little bit about myself. I've been a full-time trader, over 20 years of experience full-time trading, more than 20 years if you count in the part-time trading situation. I've been a professional trading coach and technical analyst since 2007, and I'm also an expert in Ichimoku Kinko Hyo technique. Also a director at Zenefix, an independent market consulting company. I've been invited as a guest speaker at Trading and Investing Expo across Australia, Invest Fair in Singapore, as well as the ATAA and the APTA conferences, which is the Australian Technical Analysts Association and the Australian Professional Technical Analysts. All right, cool. And the three main phases of price movement, and there are one particular phase that we need to aim for in terms of trading news. All right, so I'm going to lay down some rules for news trading as well, and I'm going to give you some examples on the pending orders as we will be using for the NFP session that we just used last Friday, and for tomorrow's CPI number we will be using the sell stop and the buy stop strategy. But there's also a buy limit and a sell limit strategy. This is a very unique use case scenario, but can it be deployed for news trading? Yes, it can. It does take some skill and understanding of technical analysis as well. All right, so we'll focus a little bit more on some of the stuff that we can do after news releases as well, which is something that we did for the NFP last Friday. All right, so this is the code. It's non-farm 2024. This code is to double your deposit bonus. That's valid until the 31st of December 2024. So make sure you are using this code when depositing into your Octa trading accounts. All right, let me go through the chat there. I think there's some chats. When it all can. All right, let's get started with the webinar for tonight. Okay, so the code again is non-farm 2024. It's valid until the 31st of December 2024. Okay, so we'll go through some of the advantages first in terms of news trading. And I think number one is that all the necessary information can actually be found in the economic calendar. So there's actually no need to delve deeply into technical and fundamental analysis. Now you guys might be scratching your head here. What does this guy say? Like, you don't need to delve deeper into fundamental analysis because news trading, in the context of news trading, and the one that we do during the NFP sessions, during the CPI sessions, we're not really looking at the fundamental analysis side of things. Okay, so news trading is more about reacting to the news releases, and that's basically how we actually trade those releases. But if you stick around post NFP numbers last week, I actually talk a little bit more about the fundamental side of things. So I did a little bit more deeper in terms of fundamental analysis. But do you need all that? Technically, no. All right, all the information is already in the economic calendar. You just need to know how to react to those news releases. Okay, obviously, if you understand technical analysis, that'll be even better. If you understand the fundamental analysis, it will give you the context in terms of how to anticipate those news releases. And this is why we have that scenarios before the news releases, and that's basically why we're doing this webinar. Because for those that are new in terms of fundamental analysis, I'm basically here to give you the potential scenarios and what to look out for in terms of the news releases and the potential reaction that we could actually get from the market. Right, but if you're not doing it live with me or with any other speakers at Octa, you can do it yourself as long as you have the economic calendar, because all the data is actually there. So it's actually pretty simple if you want to put it that way. Okay. Now, the other advantages is that events and calendars are ranked in order of importance, which helps in making adequate decisions, right? We tend to focus a lot more on the high impact news, because I can say that not all news releases are created equal. So we really want to focus on the news that market is actually going to react to. Sometimes we do get a medium impact news. It's more like 50-50 whether or not market is actually going to react to it. Obviously, the low impact news, I would say about 95% of the time, it doesn't cause a ripple in the market. But again, depending on the context and depending on the situation, sometimes it does cause that ripple as well. So even a low impact news can actually be something huge as well. Now, again, there are going to be risks involved in news trading. Don't take it for granted that news trading is without risk. I think in news trading, there are actually risks involved, and you need to understand that risk. We just cannot assume that everything is going to go 100% as we anticipated. Okay? All right. Publication of statistical reports noticeably increases volatility, and this allows traders to potentially earn significant profits. Now, you need to understand the difference between an investor and a trader. As an investor, they want to avoid high volatility in the market, because anything that's volatile is not a stable investment. But, if we look at it from a trader's perspective, we need that volatility, because if we don't have that volatility, we can open a position in that, and if there's no volatility, we're not going to go anywhere. The market is basically going to go flat. Now, if you take a look at the movement in the currency market in terms of January and February, I'll be honest with you, it was pretty flat, right? We have a low volatility in January and February because in terms of risk sentiment, it was a little bit more on the positive side. We don't see a lot of volatility in the market. Okay, so with news releases, it will create that volatility for you. And as a trader, we are going to be looking forward to those volatility, because we want the market to be volatile. If the market is not volatile, it's actually going to be hard for us to achieve our target in a short period of time. So we need that volatility. And news trader look towards that volatility. So I guess it would actually be more of an advantage rather than disadvantage in terms of looking at short-term volatility in the market. Okay? All right. Simplicity of a strategy. You just have to know how to open and close the orders without the need to learn any complex formulas. And this is true because throughout our 10 months or 11 months of live trading at Octa, I've never used a different strategy. I only use one simple strategy that we are actually going to go explain during this webinar. And that's mainly the buy stop and the sell stop strategy, or the straddle strategy. And that's basically how we have achieved the news trading performance that we have. It's not complex. All you need to understand is, how do you set up the spending orders, which is what I'm going to go through tonight. And if you know how to set it up, that's it. You're good to go. I don't think there's any problem with that. We don't use any complex formulas for it. It's simple logic in terms of market reaction to a news release. Okay? All right. The last advantage, it would be minimal time expenditure on trading. You know exactly when to access the trading platform and what actions to take. And moreover, the trading process itself can be completed in just a few minutes if the conditions are good. All right. And I'm very proud of my records. The records that we've done, I think it was 56 seconds. That was less than 1 minute in terms of trading the news releases. 56 seconds. That's how long we stayed in that trade. We got in, we got out, and be done with it. Okay, very simple. And if you're tight on schedule, I can tell you this in terms of news releases. The major news releases is typically going to get released in about 20 minutes from now. Like the CPI release, the NFE releases, they're basically released about 30 minutes before the pre-market open in the US. Now, one thing to note, if you haven't been following the outlook, I put a note today that the US just had the daylight savings, which is yesterday, and it shifted the time zones a little bit. Okay, so depending on where you are, you might need to adjust your calendar clock, because if you don't adjust it, tomorrow's CPI is not going to be released the same time as last week's NFE number. It's actually going to be an hour earlier because of that daylight savings. So again, depending on where you are, it might be an hour later, or it might be an hour earlier. So make sure you check where you are, and make sure you know that there has been changes on the schedule because due to daylight savings, and make sure you adjust your calendar right. Okay, we only need to do this twice in a year, so it's not hard. But other than that, we basically know when to go to our trading platform. Ideally, I would say 30 minutes before the news release, you want to be on standby. Okay, 5 to 10 minutes before the news release, I need you to set up your positions, and that's basically it. That's how news traders trade for the day. They don't actually stick around for long. Once they make their profits, they get out. If if it hits their stop loss, they get out as well. So news trading, if you think about it, what we did normally every month, it took us less than 5 minutes to set up the trades, and that's how long it is for me to set up, maybe on like 6 different pairs that we're looking at. If you're focusing on just 1 or 2 pairs to set it up, it's probably less than 5 minutes. So it's actually one of the time saving method in terms of trading. Okay, all right, let's talk about the disadvantages, because there's actually a lot to talk about. And I think one of the response last Friday is something that we need to bring attention to this. Okay, number one, market situation doesn't always develop as predicted by logical thinking and common sense. Sometimes if you take a look at what happened in the market, let me break down what happened. So initial reaction to the NFE trade was for a better than expected NFE number, which is higher than consensus, but there was a little bit of a revision to the downside. That's number one. That's market reaction to it. So market reacted positively to the US dollar, and then immediately after that, everyone started realizing the unemployment rate also went up. All right, so this is actually bad for the US dollar. So the logic behind this is that the Euro USD should have continued to push higher last week, but it did not. Okay, I can show you the chart later, and which is some of the case study that we need to take a look at. The Euro USD spiked to the upside, and then not long after that, within the next hour, it pushes down, it reverted back to the range and stayed there for the remainder of the trading session up until today, up until now. I haven't looked at the chart. About 15 minutes before we started the webinar, it was still flat. All right. So sometimes it's not logical. You need to understand the context. You need to understand a little bit of the fundamental behind it. So don't just assume that if it's better than consensus, it will be good for the US dollar. It's not necessarily that. If you're looking at the ECB numbers, for example, if the European retail sales, for example, it's better than expected, not necessarily that it's actually going to provide a strong push for the euro. Likewise with the GDP numbers as well. Okay, so don't assume. We just need to react to it. But a lot of people put a lot of thought into it. They were a little bit more on they do have that emotional attachment. They have that strong bias towards something, and sometimes it just doesn't make sense in terms of market reaction. It just doesn't make sense. I can give you another example. Last week, in terms of the FOM, Fed chairman Jay Powell in terms of his hearing, he was kind of pushing back a little bit in terms of rate cut and say like, oh yeah, I need more evidence. We're not going to be adjusting our interest rates to kind of meet the current interest rate, current inflation target, to adjust the current inflation target to meet the current inflation movement, right? So it was kind of a little bit more on the hawkish side, but market sentiment measured that in, and they still voted in, they still price it in that, yeah, the FOMC is still going to cut interest rate, and yeah, it goes against the US dollar, right? So comments that's actually supposed to push the US dollar higher, because of the market sentiment, it was more overwhelming. Majority of the market priced in for a more dovish FOMC that pushes the US dollar lower last week. All right, just give me a second. Let me just grab a drink because I have a very sore throat. All right, okay. Now, disadvantage number 2 is that not all news can cause a significant market reaction. As I said, not all news are created equal. There are even times where high impact news doesn't cause a lot of impact into the market as well. So obviously the NFP is going to create a lot of impact into the market, but if we take a look at how the NFP has been reacting in the market, it pushes market one direction, but for the past 2 to 3 months, we've been looking at NFP not as a single set of data, but more of part of a combination of data, right? A lot of traders are looking at a combination of the NFP numbers or the unemployment rate, and in combination with the inflation number as well. As I said, I'm not sure if I mentioned it last Friday, but I mentioned it in the Outlook today. If you haven't had the time to watch the Outlook, because I think it was just published about 2 hours ago, we are, in terms of the US economy, we are at the very top. We are right now at the very peak of the economic cycle, right? So with the peak, what comes next is actually a contraction in the market. Okay, so we're focusing a lot on the employment numbers, because if unemployment rate continues to go up and inflation continues to go down, this could actually start the process of moving away from the peak cycle to more of a contraction cycle in the economic cycle. And this is the reason why a lot of traders are focusing not just on the employment numbers, but a combination of the employment numbers as well as the inflation numbers, because the two factors here are basically the main driving factors, or the reasons why the FOMC has not adjusted their interest rate as of yet, right? But if we see unemployment rises and if we see inflation falling off, then we should anticipate the FOMC to start cutting interest rates soon. Okay, so this is basically what the market is anticipating. I think last month it was the same thing. We only got half of the picture. A lot of traders were just waiting for the inflation number to play out as well. Okay, now number 3. If you're unable to accurately guess the market direction or analyze the situation incorrectly, you may experience significant losses as well. So with the high volatility, you could gain easily, but at the same time, you could lose a lot easily as well. I will also add something in here because I think there were comments last Friday that points out that a lot of traders that were looking at the live trades were not really looking at their risk, right? So lot sizes were not accounted for, and at the very beginning, at the disclaimer, we just say news trading can be very risky, okay? And you need to pay attention to your lot size, because if you got your lot size wrong and you think that every single time we trade every single month it's going to be 100% profit, that doesn't work like that, okay? So if you try and load up on a small account with huge position size, you're going to get burnt out. You're going to get margin call. You're going to blow out your account, right? Different words, similar meanings. So make sure you understand what you're doing first before you load up on news trading. Okay, make sure your lot sizes are correct because it's a high volatility situation. Easy gain, but at the very same time, it's easy for the market to demolish your account if you have a low equity, for example, and a huge lot size. So think about it very carefully. There are risks involved. In fact, when it comes to news trading, is it a higher risk compared to when there are no news in the market? Depends on who you ask, right? I would say yes. Okay, there are going to be risks involved. The reason why there's actually a higher risk, because we have a higher volatility. Anything with a higher volatility is considered a higher risk. If you want lower volatility, that means you like lower risk. Okay, so if you're thinking that, yeah, I like news trading, then you would and you should have a high risk tolerance. Otherwise, this is not for you. And I'm just going to clarify that for you. News trading is not for everyone. And make sure you understand what you're doing before you start jumping into any news trading. Okay? All right, so those are the advantages and the disadvantages. Might seem like there's a lot more in terms of the advantages, but the disadvantages, there might be only 3 disadvantages, but they're considered major depending on the situation. You make a wrong move when it comes to news trading, you could blow up your account. The other disadvantages that's not here, I'm just gonna say it out loud here. Volatility increases, your liquidity in the market also drops. When liquidity drops in the market, your spreads get wider, and there could even be a potential of a slippage, i.e. your order not getting executed at the particular price that you want because of that low liquidity. Sometimes market gaps and you might get filled a little bit later. You might not get filled immediately. You might get filled at you might get filled at a different number, which could cause a much larger spread as well. So think about it before you start news trading. Okay? All right. So let's talk about the most profitable news for trading. And I would say that all news need to be divided into 2 categories. Obviously, number 1 is the unexpected news. This would include your terrorist attacks, military conflicts, natural disasters, and during such times, typically national currencies become much stronger as investors get rid of stock which are about to fall, right? So again, there are things to look out for, especially with unexpected news. There are several currencies and assets that we would consider to be safe haven, depending on what happened. For example, terrorist attack, military conflicts. This could typically push the safe havens higher. Now, one of the safe havens, obviously, is the international reserve currency, which is the US dollar. Number 2 would be the Japanese yen. Number 3 would be the Swiss franc. In terms of assets, that could be other assets that could become a safe haven assets. Gold is typically one that we look at as a potential safe haven assets, and this has been the case for how gold prices has been going up, because it was functioning as a safe haven assets, because as stock prices goes up, as the market becomes euphoric about the all-time highs in the indices in gold, there are concerns that the bubble could pop. So safe haven assets like gold, typically it's more advantageous at this point in time. Okay, and then we have the periodic news. This comes out regularly, and it includes the following reports. From if you're trading stock market, it will be reports from the companies and everything related to them. It could be their earnings, right? We look at earning calls as well. If you don't know, with Octa on MT5, you can actually trade the stock market. So we have actually taken advantage of that earning calls from the stock market last month. And if you're interested in that, we might actually be doing a little bit more on more on stock trading. Okay, but scheduled releases, we have central bank meetings, monetary policy decisions, and forex market reacts to them by when they raise or lower interest rates. And for this month, on the 20th, we have the FOMC, and I believe, if I'm not wrong, end of the month, we have the Bank of Japan as well. Both are going to tweak their interest rates or monetary policy decisions, and obviously, these two are going to be a market moving event. Okay? Then we have the quarterly GDP reports. One was actually released for Japan today, and Japan just nearly missed the technical recession. Quarterly GDP was at 0.1%. We still see 0.1% growth. It didn't go into a negative territory. So overall, not a technical recession as of yet. Inflation index, like the CPI, Consumer Price Index, and the PPI, those are obviously market moving event. We have the CPI number tomorrow, which we are actually going to be trading live same time tomorrow. We will be trading the CPI live same time tomorrow at the exact same time. We are going to get our CPI numbers, which is going to get released tomorrow. Okay, and then the PPI is going to be released on Thursday. Obviously, that's a Producer's Price Index. We'll explain this tomorrow during the CPI live trades. Indexes of business activity in manufacturing and services. ISM manufacturing indices or purchasing managers index, right? So we got the flash PMIs, and then from the US we got the flash PMIs, we got the ISM PMIs as well. Unemployment numbers that was released last Friday, and we talked more about that last Friday as well. So this is some of the periodic news that could impact your trading. So again, there are going to be two types of news, right? One would be your hot or unexpected news. This is unplanned. Anything can happen. Conflict in Ukraine, Russia, obviously that's one that in recent times, and then we have the conflict in Gaza Strip as well, which is still ongoing right now. Those are military conflicts, geopolitical tensions, even trade war between the US and China. It becomes something that could actually impact the market as well. Natural disasters like the tsunami in Japan, that impacted the Japanese yen significantly because we saw a lot of repatriation to the Japanese yen due to humanitarian aids coming into Japan in form of Japanese yen, obviously. So yeah, we have that sense of repatriation as well. And that caused a huge impact into the market. Yes, it could. Terrorist attack, obviously, it could, depending on the scale of the terrorist attack, but something like the 9/11, obviously that shook the market significantly. It basically shook everyone that saw it. If you're old enough to actually see the event, it's kind of burned into our memories when that occurs. What we were doing back then, right? If you ask anyone that were around to witness it. We all know what time it happened. We also know and we also remember what we were doing at that particular time when that second plane actually hit. So yeah, terrorist attack like that, it could cause a huge ripple into the financial market as well, right? Typically out of this unexpected news, we have the expected news, obviously. Those are going to be your periodic news. These are your scheduled releases, okay? Okay, so let me pause for a little bit because I think there's a little bit of a chatter on the chat, but let me just take a look at it. True, better. Is it true to better wait until 30 minutes after high impact news releases before entering into the market? I would say 15 to 30 minutes, right? If you're thinking of, thinking about the situation, in the next 15 to 30 minutes, typically we saw a little bit of a sign in terms of the direction of the market, in terms of how the market has been pricing in those numbers as well. Is it true that, welcome back, thank you. I've been around. We still do this every month. Is it true algo and speculator play more during news releases? Speculators do trade to become more active during news releases, yes. Algo not so much, because algo kind of reacts to the mathematical data. Algo actually takes out the fundamental. They actually ignore the fundamentals of things. But yeah, short-term volatility typically because of speculators in the market, yeah. In Nigeria, it went back an hour because of daylight savings, yes. We are in Asia. I'm in Asia. At the very least, I am in Asia. And yeah, it does come back an hour as well. If you're in Australia, it will be an hour earlier as well. Are we going to do live trading session? If yes, what pairs to be ready to follow? We are going to be doing some example, but in terms of news releases, I don't think there's actually any news releases, but we'll go through that once we talk about the economic calendars. Okay. All right, this is the major part. I know I spent about 30 minutes talking about the risk and whatnot, but this is the major part that we need to understand. And I went and reviewed a lot of our trades in the past 10 months. So in the past 10 months, we did about 20 live trades, right? Out of that 20 live trades, there are cases where the market is not in the right phase and we attempted to trade it. Typically, it does create a little bit of a whipsaw. So I can tell you right now with higher confirmation that if you want to review our previous trades, you can backtrack it. The one that we had more success in typically happens in the accumulation phase. So we need to understand the three main phases of price movement first, okay? Number one is the accumulation phase. This is where typically the most informed and forward-thinking insiders trade here. This is where we want to start opening our positions, setting up our orders, because we want the market to be in a sideways market before the news release to happen. And then we have the participation phase. This is where the technically driven traders enter here. So these are traders that react to the news releases. It pushes price up. And then once it rallies up, we typically, once we get in, we don't want to stay too long during news releases because there are three phases. There's going to be the accumulation phase, participation phase, and then there will be that distribution phase, right? Distribution phase are when a lot of the other traders that don't like to trade the news immediately or are late to reacting to the news, they came in during the distribution phase, and traders from the accumulation and participation phase typically get out during the distribution phase, okay? So let's take a look at, I'll come back to the news, the rules. I'll talk, you know what, I'll just talk about the rules now. But yeah, remember this one first. We'll come back to this, okay? I promise you we need to come back to this. But there are going to be three phases in the market: accumulation, participation, and distribution. So we'll need to look at one of the phases there to get our orders right. Now, there are going to be general rules for news trading as well. So you need to study a market and analyze the dynamics of that currency pair. Don't just randomly open a pair you do not understand, okay? If you don't understand how the market mechanic is for that one currency pair to specific news trade, don't trade it, okay? Let me just give you a little bit of a ground rule here. If you trade US-based releases, anything with US dollar is going to directly be impacted by those news releases. CPI numbers from the US, NFP numbers from the US, unemployment rate numbers from the US is not going to impact Euro Yen directly. It's not going to impact Euro Swiss directly. It's not going to impact Euro AUD. It's not going to impact Euro Pound directly. Okay, but it will impact Euro USD. It will impact Aussie USD, Dollar Yen, Pound USD directly. Okay, so make sure you understand what you're doing. Make sure you know the currency pair or the instrument that you're trading. Make sure you're very familiar with it. Okay, I don't need you to understand the technical side of things to be really good. I don't need you to understand fundamental, but I need you to understand how that currency pair reacts to the news release. Okay, now assess the reaction of that currency pair to the latest news. Obviously, prepare for trading by marking relevant levels on the chart. We will do that later today. Decide on your trade tactics, including when to open and close that order. Choose the appropriate trading time frame, okay? And determine the maximum risk for each order and consider using stop loss and trailing stop. Obviously, someone failed to do that last Friday and instead tried to blame it on me, which, you know, it happens. It's okay. But you need to understand the risk, and it's ideal that you understand the maximum risk for your trades, right? Are you going to be opening 10 trades? If yes, what are the risks for that 10 trades? Okay, are you going to have 100 pip stop loss for every single one of them, or is it going to be 10 pip of stop loss for, you know, all 10 of them? You need to understand the risk. You need to set out when you need to close your position. All right, ideally you need to do that because you don't want to blow up your account. Okay, so don't come running to us if you blow up your account when you're not even taking care of your own risks. Make sure you understand what you're doing. All right. The last one is that you need to decide on the terms of the deal itself. Are you going to be quick? Is it more like, okay, I'm going to get in, I'm going to get out quickly, like a drive-through? Or you can actually stay and fine dine in the market. It's up to you, right? You want to stay there for a little bit, or you want to stay there for the long run. Make sure you understand the difference, because trading news typically is a short-term deal, okay? If you want to stay for longer, make sure you're able to analyze the market and make sure you already have a plan for it. Okay, now these are the 4 stop orders that we want to focus on. You already know the buy stop and the sell stop. These are usual, right? The buy stop are order placed above the current market price, and when price is rising up, you want to trigger a buy. You use a buy stop. For sell stop, these are order placed below the current market price when price is falling down, and if you wanted to open a sell position, you use your sell stop. So getting out of the range, you want to be using a buy stop and a sell stop, right? So these are going to be breakout scenarios. Now, the sell limit and the buy limit, we typically don't use this during news releases, not as much, because we saw more breakouts rather than, getting rejected or whatnot. But if you have an understanding on technical analysis and you're looking at a specific price level that you could actually see as a potential resistance in the market, and you might want to see the market go up, touches that resistance, get rejected, then you want to use that sell limit order at the resistance level. Okay, the opposite is true. If you think a support is going to hold strong and you need the market to maybe push down a little bit, hit that support level and then bounces up, then you can use your buy limit pending orders. Okay, so again, breakout scenarios, these are going to be your stop orders. If you expect more of a rejection or a bounce scenario, then use the sell limit and the buy limit strategy. All right, so let's talk first about the buy stop and the sell stop strategy. Take a look at the situation here, and this is something that we just talked about before, which is the accumulation phase. Now, I have reviewed this over the weekend, and you are free to review it. All the histories of our live trades are on the channel. Feel free to review it. But where we find success is when the market is quiet before the news release, like this, which is something that we didn't see last Friday because market was already pushing higher last Friday instead of being flat in a range-bound market condition. I think for tomorrow's CPI, we might actually be looking at this, but we need to identify the corridor of volatility. You want to see where market is actually going flat, right? If the market is flat, we can safely place a reliable buy stop. We can also safely place a reliable sell stop beyond that corridor of volatility. So you have a buy stop, you have a sell stop in this example. If price breaks that green line or touches that green line, it will trigger a buy order for us. If it triggers the sell stop, it will trigger a sell position. So this is basically what happened. It triggered the buy trade at the buy stop. When this happens, and this is something that I don't have time to explain during news releases, is that we need to close the other orders. Okay, so we go into the market before news releases, we got 2 orders. If one of the orders get triggered, you need to close the other order, because the worst case scenario is that you get a whipsaw, and if you didn't close the order fast enough last Friday, you would have that whipsaw. You would have the buy trade and the sell trade open at the same time. And I can give you that example here on the Euro USD last Friday. This was basically the range, right? Doesn't matter what you do, if you didn't close your order, your buy stop and your sell stop is going to trigger. Okay, so make sure you know what you're doing, because we need to cancel the other order. So make sure you keep an eye out. And then there were a question, where's my stop loss? Right? I think there was a question last Friday, how come I never use the stop loss? Well, look, during the live trade, I need to open several instruments. In your position, you would probably focus on 1 or 2 trading, two pairs to trade, right? when you have the time, when you can actually slow down and do that, you can actually start your stop loss order if you want to, and you're able to manage the orders much better rather than handling 10 trades at the same time. If you don't have the experience, do not trade 10 pairs. Focus to about 3 or 4 at max if you want to trade the news. Okay, don't just trade whatever that was set up during the live trades. You just do what you want. For example, if you only trade the Euro USD, then yeah, fine, just trade the Euro USD. Okay, so again, this is what happens. We have the accumulation in the market, corridor of volatility. This is when you want to set up your buy stop and sell stop, and then obviously the breakout happens. Market is going up, you got your buy stop triggered, your buy trade is triggered, you need to close your sell stop, you have your initial stop loss. Once you're in profit, you can move your stop loss to break even if you want to let it run. Typically for me, if you're trading the CPI release and the NFP release, the faster you get out, the better, right? If you can get out within the first 1 minute, awesome. If you can get out within the first 50 minutes, much better, right? Typically, we don't want to overstay too much because we are in here just for the short run. But if you do want to stay in, you can move your position into a risk-free position by moving your stop loss to break even. This would kind of pretty much turn it into a risk-free trade. Okay, a lot of people just don't know that you can actually do that if you're not familiar with stop losses. Okay, so let's do a little bit of a practice. But before that, I actually want to talk about the limit order and the buy limit and sell limit strategy as well. Let's just take a look at this first, and then we'll go to the chart and look at some examples. Okay. So the stop orders are breakout strategies, right? But this one here, you're kind of eyeing a little bit of a potential resistance. There might be a little bit of an order block up top, for example. And if you see that, maybe you want to sell a sell limit up there. So it's a pending order above the current market price. If price goes up to that resistance level, open a sell position for me. And that's basically what it does, right? So if the market sometimes during news releases, it kind of spikes up a little bit, touch that resistance, and then gets slammed down, like in this example here. So you can use a sell limit strategy like that, or a buy limit strategy like that if you understand some of the technicals, if you understand where are the potential order blocks in the market. And we actually did a webinar on smart money concepts. If you want to go through that, I think we did that last year. I believe we did that last year. So it's still there. If you want to type in SMC on the Octa channel, you should be able to find our webinars there to talk about the order block. So if you have that understanding, you can use that limit order if you want to. But I want to clarify one thing. If you're not familiar with your price action, if you're not good with the technical analysis, I would say skip limit orders, because you need to know what you're doing before you use these limit orders. Okay, they're a little bit more complex as well. Okay, so let's go on to the chart. Now I'm going to talk to you as if in the next 15 minutes, for example, we're going to get a news release. Now, from what we see, let me just delete the lines first. We don't need that, okay? And I'm going to go into the 15 minutes time frame. What do you see here? Do you see an accumulation phase? Do you see a distribution phase? Or do you see more of a participation stage going on in the market as it is right now? If the CPI is going to get released tomorrow, and the market looks like this, you're in a good hand, because we are in that accumulation phase. Okay, let me add something here. Okay, all right, so we are actually in that accumulation phase at this point in time. Market is just going flat. It's just going in a sideways range bound market condition. So this is actually pretty easy for a breakout. Whether it's actually news trading or not, in terms of using the buy stop and the sell stop order, the logic is the same. We know that this is currently range bound. You can actually create a little bit of a barrier, right? So I can actually create a buy stop up there, which is slightly above that corridor of volatility, which is this. This is our corridor of volatility, right? We want to have our buy stop and our sell stop outside of this barrier right now. So assuming there's actually going to be a news release that could create a little bit of a breakout for the Euro USD, this could push this down lower. So my sell stop is there, just in case if it triggers. Where's my stop loss, right? You can adjust this, you can modify this. Obviously, you want to have your stop loss at the very least on the other side of it. So stop loss is going to be at 1.0950, which is where our buy stop is located. And the same thing for the buy stop, we need to have our stop loss at 1.0930. Okay, so this is basically how we gauge it. And also in terms of potential target level, we're typically looking at 1-to-1 target level, but just in case we actually do have a little bit of a reference point, we could potentially target a little bit higher, maybe about 1.0975 as our target if there's a buy stop. So we can actually set our buy stop here. I can set my target 1.0975, right? So it's up there. That's my take profit. This is my stop loss. My risk reward ratio is good. Now, for the sell stop, for example, I can do my take profit at 1.0880, right? A little bit lower than 1.09. I can do that, and that would be around there. So once I do that, obviously I can adjust this however I want. We can have it to 1.09 if you want to, but I'm happy with about 1.0890 in terms of our take profit level. So the reason why we need to do this, if we can set our pending orders before a news release happen, you can actually trade a lot more currencies if you have the time to manage your trades, right? Because I need to do it in the last 5 minutes, because I need to explain the theory during our live trades. I don't have the time to kind of slow down, set it up nicely like this. But if you have a lot of time, you can set it up. If you see that corridor of volatility, you think the market is actually going to break out, then you can actually set it down slowly like this. No big deal, right? You can then move on to the next pair if you want to, and then you can move on to the next pair. You can move on to the next pair. Everything is set up. Once the news is released, you don't need to trade them manually, because if you want to trade the euro, pound, or yen, gold at the same time during news release, impossible. This is the reason why we use the stop orders, because then it will trigger a lot more trades than we can actually humanly can. Okay? So obviously pending orders are great, not just for news. If you need to be away from your computer, you can set up your pending orders as well. This is going to get triggered if you're not around in front of your computer during that specific time. For example, maybe I'm going into the meeting in the next 10 minutes, and then the CPI is going to get released in about half an hour's time. I might miss it, I will miss it, but I can set up my orders. CPI gets released, I still trade, all right, even though I'm not around in front of the computer as well. So I think that's how we use the pending orders, right? So those are the pending orders for the Euro USD. Now let me give you a little bit of an example onto the pound USD, for example, here, right? So the pound USD, we saw a little bit of a resistance starting to build up. We also see a little bit of a potential support starting to build up around here. We have a little bit of an order block as well for the pound USD. So the order block is going to come in about 1.28 to about 1.2815. In this case, what if, actually let me adjust this. Okay, what if we saw this happen, right? We saw price push down, but we know there's a support there, right? There's a support building up here because we have a little bit of an order block. And our view is that we could potentially see a little bit of a push higher once price bounces off those support area. Okay, maybe I'll just change this a little bit. Draw object as background. No, there we go. Fill. Okay, what if this are going to be your order block? Okay, so if we see prices come down there, maybe I'll change that to a different color, because red is the red. Is red on red is not great. Something about yellow. Okay, there we go. So right now, if I anticipate that to happen, maybe I can create a buy limit. Okay, so I can create a buy limit. So if I right click around there, I can create a buy limit. I can adjust it obviously. So if price goes down and maybe bounces off 1.28, it's going to fill me on a buy position. Now in terms of stop loss, I think one of the advantages of a buy limit is that your stop loss doesn't have to be huge, because I can have my stop loss at 1.2775, and I don't even need to go that low. Maybe I can have it about 1.2783, you know, just around there. And I'm aiming for a return towards 1.209, so I can set my take profit there at 1.29. Okay. Now, if you take a look at the risk reward ratio, obviously we're looking at multiples here. We're looking at what, 1 to 3 risk reward ratio if we take this trade on the buy limit. And the difference between the buy limit and the stop orders, for example, the limit orders and the stop orders. If you take a look at the stop orders, we typically have about 1-to-1 risk reward ratio, right? About there. With the limit orders, you actually have a smaller risk in the market, because you are opening very close to a potential support. You're opening very close to a potential resistance in the market. So not much room to go. You're typically attempting to counter the market at those potential resistance or support area. Okay, by doing so, of course it's risky because you're countering the market momentum, but at the same time, because you're opening it during around support and resistance area, typically you will have an optimum entry level, because your entry will be very close to your potential stop loss. Okay, so I think that would be the advantage to the limit strategy, comparing it to the stop strategy. But can you use the limit strategy during these releases? Yes, you can, if you understand what you're doing. But typically a lot of traders use that breakout strategy, which is the stop order strategy. So limit orders are great if you understand what you're doing. If you don't understand what you're doing, do not use limit orders, because they can get very complex. Okay, so make sure you understand the difference between the two there. Okay, I'll answer the questions during the Q&A, but yeah, can you also trade the news after the release? Yeah, we can trade the news after the release. In fact, with the NFP numbers, we typically want to look at a potential fade. I think we recouped some of the losses last Friday through a trade when the market starts fading, right? So we were trading after the news. We were looking for a little bit of a fade. We were looking for the Euro USD to come back down a little bit. We were looking for gold to come back down for a little bit. Good thing we got out quickly on gold. Otherwise, it would smash your position as well, because you continue to push on higher. But yeah, you can trade after the news. No problem at all. I don't think a news release must be something that you need to rush into. A lot of traders actually try to stay clear of the news releases, right? If you're not a risk taker and you want it to be a little bit safer, you want the volatility to pass, you want the liquidity to come back to normal, you typically stay away until about 15 to 30 minutes after the news is released. So you come back in once the dust has settled. Okay, so you can slowly analyze the release of the news. No rush. No one is going to be rushing you. When we talk about the context of trading live with the stop orders and whatnot, those are going to be during news releases, but you can still trade after news releases. And after news releases, typically what works are the limit strategies, no longer the stop strategies. Okay, so sorry, the limit orders, not the stop orders. The limit orders are the ones that we use post news. Stop orders are the one that we actually use during news releases. Okay. All right, let's do a quick test before we go into the Q&A. Hopefully you guys can answer this. It'll be very quick. It'll be very easy. All news can be divided into two categories. What are they? And what are the type of orders most often used in news trading? And again, what type of pending orders do you know right now? And when should each type be used in trading? We've talked more in details about this just now. So if you can provide me with the answer, that'll be great. While I wait for the answer, I'll go through the list of potential questions that we have. All right. Urgent, scheduled, no, close, not right. Unscheduled, obviously unscheduled, unscheduled and scheduled, right? Unscheduled and periodic news. Stop orders, yes. Hot news and periodic news. Thank you, Emmanuel. That was good. Hot news and periodic news. Tie orders most often used in trading. This is easy. I keep repeating it over and over again. Stop orders and limit orders. Yes, we use stop orders a lot more during news trading, but both are right. Stop and limit orders. Okay, cool. I think you guys know what it is. So let me go through some of the questions. But before that, this is the code again. I'm actually going to leave it at this just in case you guys need the code. It's not from 2024. And I'll answer the questions that we have here. So Machu Benedict was asking, what are the conditions in terms of using the straddle strategy? The condition for a straddle strategy is that we need that corridor of volatility. Right, we need the market to be in the consolidation phase. We need the market to be in that accumulation phase. So we need the market to create that range bound market condition that we have here. Okay, so assuming that we have this corridor of volatility, we have this range bound market condition, it provides us with a higher probability. But if the market doesn't do that, and if the market continues to grind higher, for example, I'm trying to find examples here, maybe like the Aussie USD here, this one has already pushed down lower, so we can probably identify the upper resistance, but we as before releases, we just created a new low. This is basically what happened last Friday. We cannot create a pending order when the market is already pushing in one direction like this, because it's very hard for us to create that stop order because we don't know where the sell stop is going to be. We have the buy stop. All right, you can put one, which is the buy stop, just in case it does break down the other side. But if this continues to drop, we don't have the sell stop. We can look at a higher time frame maybe to find a sell stop, but we don't have that. For example, on the Aussie USD here, we just bypass the low that we have right around there. Is that significant? No, of course not. The next significant low is down here, which is about 40 pips down. Obviously, we can't trade like that, right? Because our buy stop is there. Our sell stop needs to be close by as well. But if we don't have that corridor of volatility, I think the Euro USD just got triggered. I didn't close it out, but yeah. Anyway, just assuming that this is news trading, right? The news just came out. We just get our sell stop triggered. You want to close your buy stop. Okay, you want to cancel your buy stop. So we got everything done, but yeah, obviously this is just an example. Do not open this trade. This is just an example that got triggered. Okay, but let me go back to the Aussie USD. If we have the area to create a sell stop, I can create a buy stop here. I'm not able to create a sell stop because I don't have a low that I can use to trade on the Aussie USD. The next logical low that we have here which is really too far down there. I'm not going to create a sell stop down here, so I might actually skip the Aussie USD in an example like this, right? Because I'm just not able to create a stop orders because we don't have that corridor of volatility in the Aussie USD, just for an example. Okay, does presidential election count as high impact news? For example, if candidate A won, market will risk on, etc. Yes, it would be high impact news. Typically with presidential election, I think depends on the country. But if we talk about the U.S. presidential election, typically if we get the Republicans winning in the market, it's typically more positive. But again, really depends on the presidential candidate themselves. Okay, but it is a scheduled risk because we know when the election is going to take place, right? It's not going to be unscheduled. We know when the election is going to take place. Okay, so it's the same thing like waiting for news releases as well. Kind of conflicted, kind of have a bias. Dollar has been weak for weeks. Even the news come out a stronger economy doesn't do much. If tomorrow CPI comes lower, would dollar weaken? The logical conclusion to that is yes, because the economy is not. It's still strong, but it's not. Maybe it's time to for the FOMC to kind of loosen up a little bit. That's basically the main driver behind that. But can the US dollar weaken if the CPI drops tomorrow? Yes. Core CPI drops and headline CPI drops, it could weaken the US dollar. But if if the CPI turns out to be a little bit higher, that would actually give the US dollar a little bit of a boost at this point in time, despite the higher unemployment rate. My bias in current market move makes me hard to make a judgment and open a position. If you're not sure about opening a position, the best solution is to not open a position, because not opening a position is also a stance that you can actually take in the market. So if you're not sure, do not open a position. Simple as that. How do you know once it breaks out? It won't just be a fake out, as sometimes it's just a spike. We don't know. That's the reality of things. Now let me explain a little bit why we don't know. Because I can go back here and let me just see if I can drag this down. There we go. Let me just drag that down a little bit. Okay. So let me explain. We don't know if it's actually going to be a spike on the breakout, right? Obviously, taking a look at this one here, if I go into a small time frame, we saw that pullback. You can see the previous trade history there. That was that whipsaw that we have. So I'm going to kind of level out that first. Now, first of all, what we have last week wasn't really a proper breakout, right? Because we actually do have a little bit of a whipsaw going on in the market. And one of the reasons for that is obviously we don't have a range of volatility before the news releases, because this should be it, but obviously as the news gets released, it kind of dips down a little bit lower, so we need to react on that. So this was our range. Obviously you can see what happens here. Initial release was for a stronger US dollar because the NFP number was higher than consensus, and compared to the previous revision, it was still higher than the previous month. It revised. So we saw that the Euro USD kind of spikes down to the downside. It triggered your stop orders, right? It triggered your sell stop, and the market just kind of whipped back. This is basically what we had to endure last week. Now, we don't know if it's actually going to be a spike because the reaction to the market was so quick. It's not humanly predictable at all, right? We don't actually have control of that. That's what we need to plan out. Now, if you think about what happened last week, we saw that spike happen. Was that the original direction in the market? If we take a look at the news releases, this is when the news gets released. So what I was saying, right? The buy side and the sell side is going to get triggered. Both sides going to get triggered. Doesn't matter what it is. If you didn't act fast enough, you're going to be hedged in that range there. Now, we saw that move higher. A lot of you guys probably think, oh yeah, it's a proper breakout. Now, I would say a breakout, again, like trend, is subjective. All right, it depends on the time frame you look at. If I were to look at a 5-minute time frame, it is enough for me to consider, oh yeah, we have a little bit of a breakout. We can actually take our profit, because if you take a look at the range here, if we measure the range, right, this is about 12 pips, right? If we take 12 pips from our entry to the very top, of course you'll be out because it's a one-on-one trade. Now, can this breakout considered to be a fake out? It depends on the time frame, because once you go into the 15-minute time frame, we actually see a little bit of a reversal going on once the price breaks, and it actually fades down even lower. And in fact, if we take a look at the NFP positioning, if you have that sell stop and you leave it open today on the Aussie USD here, you'll actually be profitable. But again, we're not there. This is looking at after the case. Things are different. Okay, so yeah, there's no way to guarantee if the breakout is not going to be a fake out, because if we trade the news, we're looking at a smaller time frame. It's on the 15-minute time frame. If we go on to a higher time frame, even on the hourly time frame, the 4 minutes on the 4-hour time frame, on the hourly time frame, it's actually pretty consistent that we actually do not see a breakout because there's no hourly close above 66.50 on the Aussie USD. Okay, so as I said, the breakout, whether it can be confirmed, depends on the time frame itself. Obviously, if we look at a higher candle, the breakout is going to be of a higher quality. It's going to be of a higher probability. If you look at a small time frame, it will be of a lower quality as well. Okay, so a breakout, a small fake outs on a small time frame. Do we just close when in profit or wait until the next range? It's up to you. As I said, you you want to get out as soon as you can. Ideally, when it comes to new trading, we want to get out as soon as possible. All right. You can set a take profit, obviously, but if the market gives you more than what your initial take profit is, and you feel that that's enough, get out. Don't get greedy when it comes to news trading, because things can reverse easily with news, especially with the NFP numbers like this one here. We might actually see a little bit of a fade happening in the market. Okay, we see that reversal happens in the market. It's actually very common. Okay, so we don't want to stay too long, because if you stay too long, 5 minutes, 10 minutes, you're profitable. In 15 minutes, you're at the very peak. You stayed longer than 15 minutes, market comes crashing on you. So we don't know when the market is actually going to come back on you, because we have that initial news release, and then all the traders are going to look at that news information, and then we're going to process that fundamentally. We might have a different outlook from the initial news release. So what happens during news trading, sometimes it is illogical and it doesn't represent the long run. This is just short-term volatility. Okay, so just keep that in mind. Okay, cool. All right, so what's next? Tomorrow we're going to be doing our live inflation trade, our live CPI trade. We're going to talk a little bit more about what inflation is, what is the CPI, what makes it different from the PPI, and also obviously we are going to trade live on the CPI. And tomorrow is very simple. Get yourself ready with the stop orders. All right, exercise, prepare, know how to do it. Know how to set it up quickly, whether it's on mobile phone, whether it's on your computer. It's easy on computer because it's just right click on the chart and then you can just go to trading. You can create your sell limit or your buy stop, but on a mobile phone it does take time a little bit. So depending on how you actually trade tomorrow for the CPI, just make sure you know what you're doing. Just make sure you understand the stop orders, because tomorrow we are going to use the stop orders to trade the CPI live. Okay. Any scenario for the CPI, we will discuss that tomorrow during the CPI release. Okay, so as per usual, I will talk more about the theory. 15 minutes before the release, we'll talk more about the potential scenario and the final consensus for the CPI. Okay? All right, guys, let's wrap it up for tonight. Thanks for joining in. I'll see you tomorrow for our live trade, or our live CPI trade tomorrow. Again, half of the answers, we already have that with the higher unemployment rate. We don't know what the other half is, whether or not inflation is going to come down as what the market is expecting. Okay? So with that, good luck to your trades for